Our friends are protecting families, protecting pack. Today we're going to talk about high-low no trade zone. It's a feature in our leverage trapper bot, and I want to kind of start a series of kind of the features of those bots and how they work, so that you can tweak them and adjust them, and also we'll put it in our training. Okay, so we're going to go ahead and look at our live chart here, and let's go ahead and pull up the text file. So what we're going to do is we're going to search for a high-low no trade zone in our text file. And so once we search it up, we're going to find out where they're located here. Okay, it kind of starts here. And in order to turn that on, you set that to true. There's a feature to enable a short top or long bottom, which we'll talk about. Basically, in the no trade zone that we don't allow to trade, we're going to give it an exception to allow it to short the top or long the bottom. This here is going to be based off open and close candles, so that we would not consider wicks. We can also disable short the top and disable long the bottom, and that way we can actually kind of invert the high-low no trade zone to do the opposite of what we had set. And there are other reasons why we want to do that. And also, if you look up here, this is the we want to override the percent of high-low no trade zone distance. Let me go ahead and maybe highlight this right here. Enable high-low no trade zone, override to percent of high-low distance to true, and then override to percent of decimal high-low distance of 0.25. So that's kind of like in decimal, so it'll be 25%. And then this kind of helps with the calculation, the high-low no trade zone candle. If you have a bigger time frame, you might want to expand that to like maybe 60 minutes so that you can calculate faster. If you have it kind of shorter, maybe 3 hours or less, 15 minutes is probably enough. Okay, let's go ahead and continue on to the other settings that we might find for high-low no trade zone. Right here, this is the time frame. Right now it's currently set at 180 minutes. And then this is the percent of price tolerance. And I'll talk about a little bit based on that, because instead of using percentage of the time frame, we can actually use a percent of the price. And that way it'll have a little bit of a tighter. That way you can kind of enter on a pump maybe, but it's still a little risky. But at least you won't be entering at the very top. At least you'll give it a little bit of time to come down a little bit before you actually enter that long on a pump, or vice versa on a short. So these are the settings that you'll probably need. Okay, and that's how you would search them. Just kind of search these keywords, high-low no trade zone, and then you'll be able to find it. So let's go ahead and talk about these parameters. Alright, once you start and turn it on, it's going to kick off a few things. And I'm going to draw these no trade zones. So right now, the current setting here is to use about 25% of it between the 180 time frame. So we're going to go ahead and count 180 minutes basically, and then set that up. Okay, so these are 15-minute candles, and we kind of count back every 4 candles is 1 hour, 2 hour, and then 3 hour is spot right here, and that's 180 minutes. So in that 180 minutes, we're going to draw about 25% that we're going to call no trade zones. Okay, so let's go ahead and grab that real quick. So I'm going to eyeball this. Of course, the computer does a much better job. Now, I'm going to clear this real quick. If we are to consider the wicks of this, we will then, grab it from here, from the top of the wick as a no trade zone. I'm trying to aim. It's not doing a good job of aiming. So let me try again here. All right, so let's try again. I guess that goes. So there you go. So then let's say this is a third of the zone, and then I think this is the bottom of that 180 minutes. So go ahead and grab that, and maybe do a third of that too. So I'm gonna eyeball this. Of course, the bot will calculate a lot better. I know actually it wasn't there. It was like a quarter, 25%. So anywhere in here is not going to trade or enter, because we might be entering at the top, right? We want to wait for it to settle down and maybe give these little clear signals, so that now it's saying, hey, go short in this direction. And this here is a little bit unclear down here. We don't know if it's going to continue down, because it's making a new lower low. We don't know yet, and then we might get wicked in and might get stuck down here, when we could have waited until we're in the trade zone here, and this is where it's hanging out, and who knows, it might gonna start curve back up. Okay, so that's how that works. Okay, now if we were using instead of percentages, we're using price. So if we did use 1% of, let's say we only want to have it right now, like this is $400, right? These are $400 ticks right here. So let's say we only wanted to move $100. So let's say if we did the math here, 100 divided by, and I'll just estimate the price between 1,000. It'll be 0.0019% of the price, and that will create a no trade zone within $100 from top to bottom. And so to do that, I'll show you how that works. So if that's $100, I'm gonna eyeball it again, and if you had want it that way, so let me clear it. It'll be a much thinner or bigger depending on how you like it. So instead, it'll just be $100 like that, okay, or $100 down here. So it'll just be a much thinner way of getting in. Now these are okay, since if it's coming up and down, you might want to maybe not give it $100, maybe $200, so that you don't get stuck on this wick. If it's pumping up, you want to have actually maybe a little no trade zone here, so that maybe you can get down here, kind of thing. Okay, and then as you kind of get in on this long, then it'll keep taking off. Okay, but then you might risk that it might come down. So I personally don't like to trade high-low on top of high-low trade zones. I like to stay in the middle because our bot's more of a sideways bot, and that's kind of how that works. Okay, and so let me show you the settings on how that is done. So we had talked about it here, that we had set 180, and if you had set this to false, then it will no longer use this this percentage of that distance of the 180 time frame. If you set this to false, it would actually start using the price, and the price that you set would be down here. Let me show you that right there. Percent price tolerance 0.00618. We had calculated something close to that, I think, in my calculator. Where's my calculator? So you normally put 100 divided by 1,000. So you put 0.0019 right here for it to be $100. So this is about like a $600, $500, maybe 500, maybe $500 tolerance from top and bottom based on price. Okay. Now, if you want to expand this time frame to look at a bigger time frame, instead of 180, maybe it might make sense to look over 6 hours. So 1 hour, 2 hour, 3 hour, 4 hour, 5 hour, 6 hour. If you had put 360 minutes, it would then look over a longer time frame, and the new trade zones would be at 25%, would be something like this, where it won't trade if it's in that zone. Okay, then it will probably enter in here, because then it's a little more confident that, hey, if it's already in here, it's not going to completely go up or then tank on you or whatever. It's kind of supposed to give you a little better direction, that it's kind of, you can start trading up or down, or maybe it might come up and come down again. Okay, it's going to play within the top and bottom, kind of like how it's going to play sideways here. Okay, so if you were back here looking at big time frame, it would have been good that you had avoided this zone, and you would have had, find a clear direction, trade here, and then come back up and trade it here again. So it's kind of basically just trying to stick in the middle, so that it doesn't just take off without you, and then you don't have a clear direction where it's going. Okay, and it's risky on the top and bottoms, because we don't know if it's going to break up or break down, right? We want it to make sure it has a clear signal going down, and we're going to go in that direction. If that becomes a new low, then we won't enter it. Okay, but depending on the time frame you select, if you're here, then it will probably enter here, maybe short, and then you might get stuck a little bit, but it might continue down more and then get you out, and then this will be the new no trade zone, and then go up again. Okay, all right, let's see, let me clear this out. Let's see what else is there to talk about for this feature. Let's go back and look at the text file. Here, short top and long bottom. Okay, so now if you want to actually take the risk and short the top, you can totally do that. So let's say these are the no trade zones. from here. And on the 180 minute, this would probably be it right there. Let me clear that. Oh, it's not a good one. Okay, so in the 180 minute, you might, hey, you know what? If this is that, I might want to long this, you know. And so all you're gonna do is you're gonna keep longing this bottom part. Instead of not entering it, you would actually long this. And here, instead of shorting the top, you're actually, instead of waiting out, you would actually short this top here. But now, let's say this wasn't here this whole time. Okay, you didn't see this right side. You might start shorting it on the way up too. So that's why I don't really because it's still unclear. But it is what you can do. Okay, so let's say right here, if this candle hasn't formed yet, and you're looking down here, this will be the short area, and this will be the long area. You long this, and then you probably do your thing where direction it defines, and then around here it might start to short if it gets a signal too short, and it might. And then, but if it keeps going, then you might get stuck shorting in this little no trade zone here, while it keeps continuing. So then that's where a DCA will come in. So we usually have a dollar cost average set up so that if it does get you in a bad position, you can then cover that on a higher candle, and then move your profit line up and get out. Okay. All right, and then now there's some people who like to maybe invert this thing. So to invert it, let's say you would let me clear this. You define a bigger trade zone, like 50%. So if you had a bigger 50%, let's say we'll go ahead and call this we just do the 180. We'll call this no trade zone and no trade zone. Okay. So basically, like, you're not really gonna enter this. So what we can do is disable. Oh yeah, there's one more feature called disable the central zone, and I'll show you that in a little bit. And so basically, anything up here will short, anything down in this box will long. Okay, so that's how you invert that. Okay, so let me show you that one feature here. Clear that. I'll leave those boxes in for now. So there's this another one here. I think it's called central zone. I don't know if I labeled this properly. Central zone, but at least now you know about it. It's backwards. Did I spell it wrong? Central. Let's call it central channel. So no trade central channel. So this is if you set this to true, it won't trade in the center. But that way, when it's on top or bottom, it'll short or long the area. Okay, so what you do is you set that as false, or you can enable it, up to you. And then on the high-low no trade zone, let me try to find that. All right, here. You can then set this to true. It'll short the top and long the bottom. Okay. Now, if you want to just disable the short the top, then you could set that to true. If you want to disable short the long, along the bottom, you can set that to true. So that way you could just short tops only, and that's all you want to do is short tops. That's totally cool. So that way, these are the flags that adjusted. Okay. Now all of these settings are auto adjustable because I know that settings change all the time. And markets change all the time, and we have criteria to auto adjust these settings so that they're always dynamic, they're always morphing and moving depending on the price action, depending on the trend, depending on if you're gonna hit a breakout, depending if you reach your goal, maybe you whatever, VWAP something, you can change all that. Okay, based on these auto adjusted settings. Okay, so which we'll talk in a later series. Okay, so that way this could be possible too, where you're just whatever you define. If it fires a short signal, go ahead and take that short. If it fires a long signal, take that long. And we'll talk about later on how these signals are actually being fired based on our price motion data here, and I'll kind of talk about that on another scenario. But I think I think all of these features are kind of independent. Like because we kind of built it where it's supposedly a set and forget feature, but I think for those who have the set and forget feature and then they want to experiment more, I'm going to start building up a knowledge base based on how these little features work, and then add more and more and more to it, so that you kind of, you know, customize it to your needs, and yeah, and you'll still be set and forget, but you know, sometimes you don't want to be matching up with everyone else, right? So who knows, right? All right, cool. Thanks. I think that's all I have today. You have any questions about any other features in here that's maybe more of a priority? Let me know in the comments, and I will create a video for that, and then that way you can kind of understand these other features quicker. All right, thanks for watching. See you later.